Hello, everybody. Thank you for joining us today on the 2022's Accounting Insights and Trends brought to you by Infinity Globus. Today, we'll be going over some of the trends and some of the insights that we foresee happening within the accounting industry and what it might look like and how to best capitalize going forward in 2022. Today, we brought on some heavy hitters, and then we're going over using their expertise, not only in what they foresee in the coming future, but they actually are practitioners in the everyday of the accounting practice. I'd like to introduce Peter Scalise of Augmentation Business Advisory, chairman of both the Northeast Region Tax Roundtable and the Washington National Tax Roundtable. We also have Vivek Shah, who's a licensed CPA certified public accountant since 2007 and a chartered accountant in India since 2002, who has been practicing approximately 20 years and has industry experience within the mid to large size organizations in North America and Canada. Vivek has served at MBAF, now part of the Video USA LLP, for the past 17 years, and he is a co-founder of the Phoenix Institute, which is the training institute for accounting professionals. He is currently a managing partner at Infinity Globus and Smart Accountants and practices cross-border taxation, international taxation, and foreign taxation. And I'll be handing it over to Peter. Hello?
Peter?
Peter, if you can hear us, you might have a line through your mute button because we can't hear you.
Peter, I think you're mute.
And if Peter can't step in, I'm more than happy just to go to the jump in on my end. But
I think Peter is rejoining. It will take in a moment.
Okay.
Guys, let me introduce Alan Kotlin. Alan Kotlin is CEO of Kotlin Consulting Group. He's a merger and acquisition expert. He has been voted as top 25 thought leader for 7 straight years by CPA Practice Advisor. He has been voted for top 100 most influential in profession by Accounting Today for 21 straight years and third most influential in 2019. He's one of the experts and renowned in the accounting industry since long. And whenever there is a merger and acquisition around the industry of accounting, there might be a place where Alan is involved in it. So over to Alan now.
Thank you so much for that kind introduction. My kids all think I'm a nerd, so I wish they had been here to hear all those wonderful accolades.
Thank you.
Of course.
Yeah, so I'm going to take about the next 20 minutes. I've got 4 topics, and I'm going to combine 2 and 2. because I think this war on talent is a byproduct to some degree of succession planning, and those go together. And then the byproduct of those two is probably why the M&A frenzy going on today, and maybe a subset of that is the entrance of private equity. So I'm going to just put my timer on because I've got 20 minutes to talk, and I'm going to make sure I don't go over my stay. So the war on talent, it is as bad as it's ever been. I've been in this, I think I'm the oldest one, I know I'm the oldest one on this call, for 4 decades, and it has never been as disruptive as it is now. Matter of fact, many firms call and ask the question, when will this be over? And the answer is not only I don't know, but I don't think this is going to get better for a long time. In simple economics 101, if you get nothing more out of today, remember this visual. This is the supply of talent in our profession. This is the demand. Rare is it that I'm hearing someone say they can't grow. Most firms, and I know there's always exceptions, most firms are saying growth is not a problem. We're turning business away. When I think about what's happening today is there's some of these sacred cows. Sacred cows are things we know we should do, but we don't. We burn people out. You know, the reward for being a great performer in your firm is, what do? We give them more work. And then we scratch our head when they leave and they say they're just burnt out on public accounting. They're not burnt out on public accounting. They're burnt out on our firm. Let's just look at some numbers of what's going on in our industry. Maybe the why, and this surely builds into succession planning. In 1990, 2% of college graduates got their accounting degree. By the year 2000, and I don't want to get into a debate about why, but it dropped from 2% to 1%, a 50% drop, 50% drop of talent. Why is that a problem 21 years later? It's a problem because those people, if you age them out, are late 30s, early mid 40s. Those are the future partners in CPA firms today. When you go firm by firm, they're nowhere to be found. Every firm I talk to that has a succession planning problem, it goes like this. We've got some great partners that are in their late 50s, early 60s. Then we have some really good young talent in their 20s and 30s. And I go, wait a second, in estate planning, we call that generation skipping. You've skipped the middle generation. Yeah, that's right. They're just not there. But let's look at some other statistics. More baby boomers retiring this decade than the last 3 decades combined. You've already heard the first statistic that we just don't have enough talent to take over for those older partners. But how's another stat? Why last year before COVID did the Big Four say on college campus recruiting, we're going to reduce recruiting of accountants by 50, another 50%? Well, the answer is because they just don't need them anymore. And you know where this is going. The traditional triangle that we had of a few partners, many managers, oodles and oodles of staff is now been disrupted. It's been disrupted on one end by the bot or some form of AI, and I hear it every day of the week. In what used to take 200 man hours can now be done at the push of a button. When I go into firms, they no longer want me to have breakfast and lunch with their young Turks, with their young superstars. They don't do that anymore. Instead, they kick me to the innovation lab, and they want to show me the new bot that can do magical things. Our industry is moving more and more to technology, doing things that the kids used to do. Most of us, if we've made it to partner, remember a time in our life when we said to the senior or supervisor, this work is not challenging. This work is brainless. I can't believe I went to college to get an accounting degree to do this kind of work. And what did they say to you? What did we say to them? Hang in there. Public accounting is an apprenticeship, and just it gets better, trust me. Well, I'll tell you what, the generation today coming out of school, they're much more educated than we ever were, and they're not going to put up with that crap. They're going to go somewhere where they can find challenging work. My own son, Brian, who tried audit and who tried tax, finally found himself in a place called transaction advisory. The kids today aren't going to line up and do the kinds of things that generations before did. So if you're a heavy compliance shop, I think there's a level of talent that you're not only not going to get, you're probably not going to keep, because they're going to be looking for more challenging work. Let me move a little bit off of that into just the war going on talent. And I hope this is inspirational. I'm kidding. This is like a real downer, you know, to hear these kind of things, but there is hope. Here's a story that's working its way around the industry, and it's probably playing in your market. Remote workforce, virtual. Firms are no longer bricks and mortar. We've learned in 2020 and 2021 that we can now win clients in markets where we physically are not present. We also can win talent and have remote workers. Now, I would tell you, in the world of remote, you know, the old adage, finder, minder, grinder. I don't know that you can get remote finders, business getters. I think they have to be in your market. Minders, the ones that actually hold the client hand, that control the client relationship, maybe, maybe not. Grinders, hey, if you want to just lock yourself up in an office and give us 1,400, 1,500, 1,800 charge hours, and you're low maintenance and you're good with technology and you're a self-starter and you're really well disciplined, there's a place for you at our firm. I say all that because here's what's happening in this war on talent. Big, small, or medium-sized firm in a big market like LA, like New York, like San Francisco, calls into my backyard in the Midwest. We'll use the city, Cincinnati, because I just got back from there, and says to this manager making $90,000, how's it going? And they say, it's okay. They say, well, how do you feel about remote? Well, they said I can do it, but they'd like me in the office 3 days a week. I go, why 3? Well, no one ever used to come in on Friday, so they know that's not going to work. And the new Friday is called Monday. Nobody comes in now on Monday. So they'd like us there 3 days a week. The problem is I got a 1-hour commute to and from every day. And if I'm going 6 days, that's 12 hours of my life sitting on a train or a car. I think I can be more effective and have some of my life back and actually give them more billable time. Well, this firm that's calling in from San Francisco says, wow, you make $90,000 and it sounds like you're not that happy. If you were in San Francisco, the pay grade for what you do is $135,000, 50% more than you make. Tell you what I'm going to do. I'm going to make you an offer to be a remote worker in our firm, and I'm going to pay you the $135,000. And what does the kid say? The kid says, is this a prank call? Who is this? Give me your number. Somebody's pulling my leg. And all of a sudden they realize, no, this is real. This is the kind of disruption going on today, and it's not going away. I've seen firms that have their head buried in the sand, like this too shall pass. No, the world has changed. I'm going to make a bold comment here. There has been more change in the accounting profession in the last 19 months than the last 40 years combined. This is a new set of wheels. When you're doing strategic planning with your firm, we have to now be talking about how will we win the war on talent? I had a firm say to me recently, we used to ask the question in employee reviews, what would it take for you to stay here? And now they're asking a brand new question that at first when you think about it, it's like, don't ask that. The question is, what would it take for you to leave? What would cause you to leave our firm? And, you know, it's a crazy question, but it's one we have to ask. You've got disruption from every which way, the big four. I mean, I'm hearing these stories of staff getting 12% raises and $25,000 stay bonuses. I mean, they haven't even done anything. What are you doing? And then you hear the next level up, the supervisor or manager, 17% raises on a $35,000 stay bonus. I mean, where is all this money going to come from? And the reality is, if you can't raise rates and create a more profitable business, you're going to have a problem, because that's just going to come out of that thing called partner compensation. I talked to you about the bot and AI and doing a lot of the work. What's the other part of the huge change in our profession? It's the outsourcing. It's the offshoring of work where you can get it done at a much lower cost and probably get it done better and more efficiently. And I can't tell you how many firms I go to. If I was going to look at a chart of who's outsourcing today that previously wasn't, the chart looks like this. And I think we've all figured this out. We got to stop beating to death this old model. If we can get work done while we sleep by someone else who's really good at it at a fair price, and I would argue this is not about making money. This is about not burning out our people and giving them the kind of work that they just don't find challenging. You know, you ask a kid today, when is busy season? You know what they say back? When isn't it busy season? For the first time in our profession, we got more people quitting, leaving, because the reward for being great is you get more of it. Hey, I could go on for a long time on this thing. Succession planning, every 10 years, real easy. You've got a depth chart. 4 things you have to replace. Leadership. Who's going to run the business? Who's going to run the practice unit? Who's going to run the geography? And leadership is not a technical skill. Leadership is getting results out of people. Leadership is getting people to a place they can't get on their own. And we are a leadership-starved profession. What's the second one? Hey, real easy. In our business, if you don't grow, you die. You die a slow death. Growth is not optional. Now, I've had a lot of tax departments reach out to me and tell me that they're overworked, underappreciated, undercompensated, and they've told the firm no more business. We can't handle it. Well, we know that that's not a good strategy. We need to find alternative ways to get the work done. And when I'm talking to firms that are offshoring, outsourcing this kind of work, what's fascinating is in the old days, it was low-end 1040 stuff. In today's world, it's everything. It's audit, it's tax, it's consulting, it's forensic. And it's not just low level, it's high level stuff. And more importantly, I'm seeing more and more of these people having client contact. The world is changing. We've got to sort of break through this old way of doing things and look at new strategies as part of our strategic planning. I'm going to stop there because I've only got about 7 minutes and 45 seconds left. I want to talk about M&A and private equity. Consulting to accounting firms on strategy, compensation, governance, human capital, growth, profitability, partner issues. That's my day job. The night job is I turn into an M&A advisor. There is more M&A going on in our profession today than I have ever seen. And it just keeps increasing daily. The amazing thing is the firms that historically were involved in M&A were usually firms with revenues of about 3 to 10 million. You know, we call those life cycle 1 and 2 firms. Every time you get to a revenue, and I don't know what it is, about 10 million, but that's like the glass ceiling. You almost have to break everything you've done and invest heavily to work your way to 20 million. It's a different model. A lot of firms opt out either because of succession or strategic issues that take place. In today's world, there are more and more firms in the $15 to $150 million range than there's ever been. And they're doing it not because they have a problem, they're doing it, because they see the transformation of our industry. Call it the 4th industrial revolution. How much capital do we want to invest in technology, in talent, in training, in product development? You know, Barry Melanson, the AICPA chair, a couple of years ago at the major firm group, shocked the room. He said in 5 years, 40% of compliance work is going to evaporate. Now, that may have been a little ambitious and maybe he wanted to shock some of the people in the room, but the truth is he's speaking the truth. Every bot that gets created, every new form of technology is going to transform what it is we're going to do. And interestingly, it's going to minimize, or I use the word evaporate, compliance revenue. Because if there's one thing we've learned in our profession, we have the franchise on audits and tax returns. And when I look at too many firms, what's the thing that we're underpricing? Those very same services. So eventually the market will adjust for it. I think the big breakthrough why we're seeing big firms doing deals is simple math. I recently worked on a transaction in Seattle, Washington. 4 firms all wanted to be there. They were talking to a 20-some million dollar firm, and you would think a 20-some million dollar firm would trade at 1 times revenues or 20 million. That firm merged up or sold for almost 2 times their revenue. And you'd say, well, why would the acquirer do something so stupid? Well, the acquirer is actually not that stupid, but here's the math. They believe if they're in a fast-growing market like Seattle, Washington, they don't see 20 million, they see 100 million. But if they don't go in there with troops on the ground and somebody that knows the business and financial community, and they just move a couple people from wherever to Seattle, 3 years from now, they'll still be doing $200,000. It won't be a game changer. So I think where bigger firms have gotten religion is at 2 levels. We're willing to overpay. We're willing to give an outsider a better deal than an insider. In other words, me as a partner in that firm, I get a deferred comp balance when I retire. We're signing off and saying, you know what, if business is business, we've got to pay that firm more than we even get if we're going to win that deal. I think the second thing that's come about is many firms have realized that cash is now a real currency. This unfunded chain letter, as we talk about it. I mean, think about what our profession has done for 40 years. I'm not knocking it, but it goes something like this. Come merge your $3 million practice into our $15 million practice, and here's how the deal's going to work. I'm not going to pay you anything at closing. You're going to have to fully vest. So if you're 35 years of age, you're going to have to work for me for 30 years. And if you make it to the finish line, I'm going to slowly pay you 2 times your compensation spread out over 10 years as ordinary income with no interest. Good luck with that. Everybody says we sell for 1 times revenue. We don't sell for 1 times revenue. Take out your Texas Instruments calculator, if you can find it in the attic, and start doing present value. It's nowhere close to 1 times revenue. Who's disrupted our market? It's just starting. We've had a couple big top 20 firms go the way of private equity. One of those was Eisner Amper, who did a deal with Tower Brook Capital. Another one was Citron Cooperman with New Mountain Capital. I think we're going to see a couple more of these going on. And why are these firms doing it? It's because of capital. It's when you're transforming a business and you're buying non-accounting firms like wealth management, like cyber, like technology, like client accounting services, like industry-specific niche firms. Those firms demand cash. They're not going for this unfunded chain letter. They want cash on the barrel-headed closing. So I think private equity is looking at us, and they won't say it publicly, but I think there's 2 things they're seeing. Number one is we're an undervalued business. Why are we undervalued? I think because candidly in the partnership model, I'm not sure we run as well as we should. How do we make decisions? We get everybody around the table, and because we're genuinely nice people and we don't want to hurt anybody's feelings, we wait till we get ultimate consensus. Well, in the real business world, it doesn't quite work like that. We're built for speed. We make the tough decisions. We make the tough decisions, call them sacred cows that we have in our firm. Look, I know I could go into a lot of firms and I could put lists together of A, B, and C clients. We have no business holding on to C and D clients. You know that, I know that, you know that, I know that. But here's the problem. We rationalize everything and we don't want to cause any, ruckus, so we let it go. We do the same thing with talent. We hold on to low-end talent because something, I guess, is better than nothing. These are the crazy things. I mean, I go into firms and we complain that we can't get talent and we can't keep it. And then I look at the kind of crappy work, pardon my French, but the kind of crappy work we hold on to. Get rid of it. Raise your rates. If I could only do one thing in this profession and leave a legacy, it would be to create a vaccination or a pill that we as practitioners could take that would give us the confidence to know that we are worth something more than our rates. We don't charge anywhere close what we should be doing. My advice, and many of you are on this call, is raise your rates. Double your rates the revenue will stay. Half the clients will go away, and the other half will gladly pay you for it. We all know this. We all talk about this. We've been talking about it for decades, but the war on talent is now forcing those kind of sacred cows to in fact be dealt with. I think this private equity is going to be a bit of a disruption before it's over. We're early in the game. I could go on and on here, but I looked and I just hit the 20-minute mark. So I'm going to turn the mic back over. Thank you.
Ron, thank you very much. Thank you very much.
Yeah, thanks,
I
Alan.
really appreciate it, Alan.
Peter, it's over to you.
Absolutely,
There?
Abby. And Alan, tremendous insight. And we thank you for that on this morning's broadcast, or this afternoon, depending on what time zone the people are in. What I'd like to do is go through some of the trends that are affecting the accounting industry. One of the top 3 people in operational trends, we can first sum up in connection to staffing. And Alan spoke about that in regards to recruiting and retention. And we can't emphasize this enough on today's broadcast, because people are firms' greatest assets. And ultimately, we've got a succession planning, I will call, dilemma that the profession's never seen before. And the reason for that is we are experiencing a bursting baby boomer hyper bubble. To put this in perspective, within the States, there's approximately 330 million people. And out of that demographic, approximately 76 million are boomers. So that's well north of 22, 23% of the population. So this is not something that is limited to the accounting profession. This is affecting all professions and industry sectors. You look at it with the medical professionals, the legal profession, the banking industry, aerospace defense industry. It's due to the immediate loss of all these industry thought leaders all at once. In addition, the COVID pandemic accelerated that, with people taking early retirement. So now firms are putting into hyperdrive, trying to identify the talent they have internally to become the next thought leaders. You're going to see more and more emphasis on succession planning. You're going to see more and more emphasis on the ED&I initiative, or the equality, diversity, and inclusion effort. And many firms are also looking at sustainability and responsibility. And what I mean by that, when it comes to sustainability, you're seeing more and more of the top 100 accounting firms continue to make the pledge for zero carbon emissions. And some of you might think, what do you mean? We're not a manufacturer. We're not making a product. But what that does mean is, in the past, employees would literally be on planes, trains, and automobiles on a daily basis, going to and from work in client locations. By using technology like Microsoft Teams or Zoom, a lot of these meetings are being done remotely. The work from home model was rolled out because of the COVID pandemic, and a lot of firms have seen how well the model works. And if they could actually reduce the carbon emissions, PricewaterhouseCoopers came out last month and officially said we have a work from anywhere you like policy. So if you're able to work from home effectively, efficiently, productively, then do so. There's no requirement to return to the office. I can tell you many accounting firms are encouraging employees to not only work from home instead of the office, but even try and make sure the client meetings are done remotely. Now, when you're looking at the responsibility factor, you're also seeing as a trend more and more accounting firms embracing philanthropy and giving back to their local communities. And this is on a very large scale with, I'll say, highly diverse charitable verticals, whether you're dealing with poverty, hunger alleviation, whether it's economic development, health, social services. Some are dealing with veteran and military service personnel, preserving arts and cultural programs. In fact, many accounting firms, especially in the top 100 space, have set up separate legal entities as charitable 501c3 charities to support efforts on a very large scale, to be able to put on galas and auctions and fundraisers, and divvy up those funds to select charities. As an example, I'm on the Prager Metis Charitable Foundation board of directors, and we support multiple charities, but our anchor charity is the Alzheimer's Association, where we pledge $250,000 a year. I'm also the founding chair of the Accounting Industry Leadership Council to benefit the Alzheimer's Association, with the mission to basically bring the entire accounting profession together as one to end Alzheimer's disease and all dementias. I founded that in January of 2020. We're still under 2 years. We have over 20 firms that took the pledge and are fundraising nationwide. So you're seeing more and more accounting firms getting behind philanthropy on that very large scale. You know, if you went back 20 years ago, these very firms might have a day of stewardship, a day of philanthropy, but now you're seeing firms embrace philanthropy on a very large scale throughout the year. Now, when it comes to the other trend, mental health and well-being, what that basically is trying to avoid staff burnout. So, you know, if you looked at pre-COVID, some staff members would work 10, 12, 14, 16-hour days. And, you know, I'm based in Manhattan, and that's standard issue. Those are average work days. Now, the difference, though, of working, let's say, a 12-hour day from your home and working 12-hour days from an office is when you're in the office, you're going to take breaks to go to lunch with your colleagues, go to lunch with a client or a prospect. You might have a coffee break. You'll have an overtime meal break. That line is blurred, the line between the work hours and your personal time. So firms are making conscious efforts to put policies in place to prevent that staff burnout. Again, that break in the day of seeing your business colleagues and going out just to break bread is important, and especially that many of the work from home policies have become permanent. You're going to see more emphasis around that to prevent staff burnout. Now, when it comes to the top 3 technology trends, the most important one, obviously, is cybersecurity risk mitigation, and really making sure those protocols and infrastructure are in place. I always say there's different levels of breaches. So when you hear in the press, there was a breach at a retailer like Neiman Marcus or Target, and the credit card information was stolen. That's one level of breach, because their systems are only so good for a retailer. A whole nother level of breach is when you see it at the banking level. So when the nation's largest bank, JP Chase, got breached a few years ago, that's alarming, right? Getting into JP Chase is a lot harder, if you ask a hacker, than getting into Neiman Marcus. And then there's all other levels of breaches, like if you can get into the Pentagon, which has been breached as well. So when you think of accounting firms, that cybersecurity measures are critical, because a hacker will have everything they need to take someone's identity. When you look at those 1040 tax returns for the ultra high net worth individuals and the state level returns, they not only have their social security numbers on these returns, you have their date of birth, you have their home address, you have their W-2s, their K-1s, you know how much they make. You have a perfect blueprint, and the hackers know that. So instead of breaking into a bank, they're starting to target accounting firms across the board, top 100 space, top 200, top 300, top 400 space, etc. So you got to make sure those measures are in place to protect your firm. When it comes to tax automation, Alan spoke about this with the advent of artificial intelligence and machine learning. So the first paradigm shift to hit the accounting industry was some 30, 35 years ago, when firms of all sizes started to move away from preparing tax returns with paper and moving towards tax compliance software like Pro Systems, Go Systems, etc. What did that do? It made the process more effective, efficient, productive. You're seeing that now rolled out with AI and machine learning, not just for tax compliance, but for tax accrual services. As far as ASC 740 work goes, you're seeing it within specialty service lines. There's specialized software now to do transfer pricing, to do R&D tax credit studies, cost segregation studies, accounting method period planning work, even state and local tax, Alan mentioned bots and what they can do. Now bots are doing statistical sampling instead of a statistician. Now bots are pulling invoices for reverse sales and use tax audits. So the automation aspect is truly revolutionizing where we are as a profession. Now, when it comes to CPE training, this is another critical area. I think the trend is that the accounting firms are going to continue to showcase their thought leaders. So if you're going to send one of your partners or management team members to a conference, whether that be an AICPA conference, a state CPA conference, a TEI conference, whatever the conference may be, winning is everything, whatever that conference may be, you're still going to see the showcasing of accounting firms' leadership with speaking opportunities. You're still going to see some staff members and management team members behind the exhibitor booths in the trade show halls. That's still going to happen. But what's not going to happen are firms investing and sending staff that are not doing anything outside of learning. What they want to do is saying, if you're going to be branding and doing a go-to-market strategy as a business development effort and go to that conference to attract prospects, that's one thing. But if you're going solely for CPE, is there a need any longer to send 20, 30 staff members to a live conference and invest tens of thousands of dollars or more? The answer is no. They've been moving towards CPE training. Thomson Reuters with Checkpoint Learning, CPA Academy. There's a lot of online portals just to get your 40 hours of CPE to maintain your CPA license or to maintain your enrolled agent designation or your PTIN. You could do that online. To go to a conference, they're going to want you to promote their brand and try to use it for brand awareness and business development. And that's going to continue, I think, in the coming years. Now, as far as the top 3 growth and strategy trends, once again, you're going to see a continued focus on specializations within practices with what I'll say are renowned subject matter experts, people that teach, people that publish, people that are very market facing to bring in work. So more and more accounting firms in that top 50 to top 200, 300 space are bringing services in-house that traditionally they would either co-source or outsource with. If you went back 30 years ago, when it was the big 6 accounting firms before it was the big 5, only those firms did some of these specialty areas that I'm about to discuss. And then eventually the immediate second tier, Grant Thornton, McGladrey, and BDO brought those in-house. And then if you fast forward to today, basically your top 25, 30, 40 firms have these practices now in-house and the others in the process of onboarding them. And I'm talking about international tax with a transfer pricing expert. Maybe you have an expert doing IC disk structuring services. Maybe you have an expert doing the HOA studies, the home office expense allocation studies. From a federal credits and incentive standpoint, you're having people develop very large-scale practices centered around R&D tax incentives, orphan drug incentives, accounting method period planning, centered around comprehensive fixed asset analysis. We'll have teams that just do construction tax planning and cost segregation studies, TPR compliance for those familiar with the tangible property regs, even SALT services. They'll have separate groups that just do income and franchise or just do reverse sales and use tax audits, Wayfair compliance services, property tax abatement services. Historically, those services were not done outside of top 10, top 20 firms. Now that's being done in-house because they realize these are value-added tax advisory services that posture these firms for significant growth. Now, when you think about advisory services, tax consulting, now referred to as tax advisory, certainly falls into this, as accounting firms are looking again beyond bookkeeping and beyond tax compliance services to achieve that growth. Strategic co-sourcing and outsourcing is critical. Now, if you're a small practitioner and maybe you don't do transfer pricing in-house, or maybe you don't render the R&D tax credit work in-house, or maybe you don't fully understand all the rules for the Wayfair tax compliance services from a SALT standpoint. It's critical to align yourself with someone that is able to do those services. Now, you may have an alliance or consider joining an alliance or an association. So smaller firms could join, let's say hypothetically, the BDO Alliance. They could join CPA America. They could join Prime Global. They could join GGI. They could join PFK. There's literally dozens upon dozens of associations of accounting firms nationwide and globally. And they join these firms to be able to have the ability to collaborate with subject matter experts in specialized areas that they don't do in-house. So if they don't do it in-house, they're not going to put their head down and ignore it. They'll be able to let their client know, this is something we don't do in-house, but we're going to do together with our partner through this particular alliance. Now, some firms don't want to pay those fees, those annual fees, to be part of these larger organizations, and some prefer to have an agreement, a collaboration to do outsourcing. And that could be anything dealing with a specialized area like a 5471, a 5472, an 1116, an 1118. It could be a 3115 for change of accounting method. It could be anything. And our next guests that are going to be speaking, Vivek and Brendan, they're going to talk about their expertise in these areas, and they're a tremendous outsourcing partner to collaborate with. So if you don't have the comfort level with, say, signing off on some international aspects with the 5471s, 5472s, their team is able to assist with that. The most important thing, though, is to realize there's resources out there. The last thing you want to do is put your head down and pretend it doesn't exist. We're a profession, so it's no different if a patient went to their doctor for an annual checkup, and during that annual checkup, they realize the patient has a heart murmur. Does that internist say, well, I'm not a cardiologist, I'm not going to mention anything? No, they're going to refer that person to the cardiologist. Same thing with an attorney. If the attorney does real estate transaction work, they're not going to put their head down if they need another area of the law to get immediate expertise. They're going to make a referral, or at least suggest they reach out. Same thing here. We have a fiduciary responsibility to our clients, where if you notice there's incentives, whether they're deductions or credits that they're missing, or there's a certain amount of risk mitigation that you're trying to evaluate, you bring in a subject matter expert and you handle it. So the key is understanding that these resources are out there. And with that being said, I'd like to hand it over to Vivek.
Yeah, thanks, Peter. I can ask the Brendan to start. Okay, then I will take it further. Brendan.
No problem, Vivek. Thank you very much for having me. Before we get started, let's go over a quick poll with some of the people we have in attendance. The poll being, key challenge faced with while running your firm. What are some of the key challenges that you're faced with while running your firm? Option A, a staffing issue. Option B, emerging technologies. Option C, changes in regulatory environment. And option D, capability to adapt and change to client needs. The main reason why we decided to go ahead and take out this poll is so that way we can get a better understanding and compare some of your responses to what the AI is expecting or what they did in the following year. Let's go ahead and put in some of the answers. Wait a minute while everybody is taking some of those answers. A new CPA will make a paradigm shift for tech. That is correct. I can see a lot of comments in there about blockchain.
Brendan, there is an issue with the sound. Okay, so can you please check it out? Okay, we cannot hear you properly, Brendan.
Is that a little bit better? Can you hear me now?
Yeah, it is good now. Okay.
Oh, perfect. I'm sorry about that. So what I was saying was, we went over some of the things when I was reading through the comments. You have people that talked about, Jeff Bezos entering in the market. What does it mean when he, made a small little investment into bookkeeping firm? We're hearing bot automation. We're hearing AI. We're hearing all this technology coming down. We've even seen people that talked about in the comments, let's look at an accounting firm more like a technological firm, right? Alan talked about speed, fastness, quickness, execution. Then Peter came in and he talked about, making sure you're taking care of the talent, because Alan also talks about, at the end of the day, we're an accounting firm. And when you're an accounting firm, your people, the assets, these are the things that what we hang our hat on, right? If you're looking at a technological firm, you can pull talent from around the world. And that's what we specialize in. We pull talent from around the world. Thus being ideally in India, we provide staffing solutions. Now, while we can pull talent from around the world, what makes it very critical and different in the accounting profession, as Alan and Peter was talking about, is it's boots on the ground. At the end of the day, we are in the client service relationship management field, right? We need to know our key industry, who are the key players within a particular area, who are the bankers, who are the insurance brokers, right? And that's what ties in doing more in donation, reducing zero carbon footprint by not only focusing on the people and being able to outsource the work at a lower price. The most important thing is providing a better culture. The biggest shift or things that I found that the accounting profession needs to take a look at in 2022 moving forward is providing this culture. And how do you provide this culture, right? When we're speaking with the top CEOs and the top people that run accounting firms, this is some of their concerns. As a sole practitioner, it's always emerging technologies. How do I best provide my services to my clients? And more importantly, what are some of the back office operations that I can use, right? Whether it's QuickBooks, whether it's Xero, whether it's Bill.com, this plethora of technologies that come in. How do I know as a CPA to make a recommendation of what type of technology to use, what type of technology not only is beneficial to my client, but also integrates into my practice management, and how can I best use it while at the same time hoping 5 years down the road, the technology will still be here. As we all seen in the accounting industry, some technologies come and go. And that's the reason why majority of us stay with, QuickBooks, stay with technology that might not be the best to our liking. And at the same time, how do I handle, my tax practice, my advisory services, and handling compliance work while learning about these new technologies, right? Then the other big critical problem that is facing majority of the CPA firms that we work with is staffing. What do you mean by staffing? Okay, so if I take somebody that came out of college, how long is it going to take for me to get them to be profitable, right? What is the realization rate going to take? Usually it's a 2 to 3 year commitment till I actually can start, receiving some of the fruits of my labor. What does that entail? Now that we have COVID and everybody's, working from home and doing things in different areas, how do I take a college kid that just left college, bring them into our organization, get them up to par in the way that we do things around here? That is the biggest thing, right? Is execution. How do we do things and making sure that you're dependent and you're reliable? Now, after that, we're starting to see some of the changes in the regulatory environment and a managing of hybrid and workforce, right? So in some of those big things that we see in the changes in the regulatory environment, that's what Peter talked about, right? How do we be the financial quarterback, right? We don't need to know everything. There's wide receivers, there's running backs, there's offensive linemen here to protect you. How do I build my team? Not only your team, like vertically within your accounting practice, but also who's best to help me, right? We're taking a look at all these other options. What can work best for us? Can we, fold in, let's say, for example, financial work, right? Can we fold in insurance work? Can we do all these other different types of things so that we can take a look, as Alan said, some of those higher profitable services? How do we move into those higher profitable services? And Api, if you want to go to the next slide. Right, so while taking a look at these higher profitable services, it comes down to staffing and having the right people sitting in the right seats, going in the right direction and in the right bus, right? And so what does all of that mean? Let's break it down real plain and simple. When you as a business owner or CEO of your accounting firm takes a look at your business, you need to have a better understanding of what can be outsourced. And meaning it's not only necessarily outsourced in the sense of handled outside of your firm, but can be best taken care of through something else, whether it's technology, whether it's hiring another admin, whether it's hiring a part-time staff member, whether it's, using professional expertise within one particular area. What is the best use of my time? And how do I get the best use of my time? So that way we can charge higher and more for more profitable services. And so what do we do over here at Affinity Globus? One of the things that we look at while working, with a lot of our partners and with a lot of our accounting firm members is, how do we get you to the next level? In order for you to get from base level to the next level is we take a look at your staffing needs. What is it when you're preparing for this upcoming busy season, or in actuality, we're now in year-round busy seasons due to COVID, but when we're getting ready for this year's busy season, what does the workflow look like? Do you have standard operating procedures? And do you have standard operating procedures that have been tested and proven true? Because as we all know, we may create a system, but even though we have a system in place, the system will only withstand the amount of pressure that we have. And the amount of pressure that we have is based off of how much practice and how much use of a system is in place. So what we provide is, we provide accounting owners with the ability to have systems that are proven and true to be put into place so that way you can scale properly. That way, when you're looking for staffing needs, we provide people with a system so that way they're not only capable, but they're also competent in the type of work that they have and the type of work that they do. And so when we're looking at the whole entire business that you have, what can be outsourced, what can be brought in-house, what can be pushed down to a lower level, staff member, what needs to be brought up to a partnership level, how do we have these realization rates, how to remain profitable? When we take a look at this whole entire, business that you have, we need to have a better understanding and get a better liking into what services can and cannot be offshored. And so what Vivek will talk about next is some of the services that can be offshored. Can you go next to the next slide, Api, please?
Thanks, Brendan. Thank you so much. It is rightly said by the Ellen and Peter both. Accounting firms in the United States are facing a lot of challenges as far as the staffing is concerned, or as far as the technology is concerned. But believe me, there are the challenges, there are the solutions, okay? So there are a lot of solutions available with your extended team, extended staff, offshore staffing. So there are so many ways, okay? Utilizing the outsourcing, you can outsource any kind of the services, okay? We at the Infinity Globus, we are the team of the qualified CPAs, properly trained on the US accounting, licensed CPA, licensed by the PTI and from the IRS. So we can provide the best service to our client, and the services which you can outsource is not only the lower level services. You can outsource most of all the services where your back office team in the India, okay, is working on so many stuff, and you can focus more on your core area, client advisory, client relationship, structuring, planning, and the projection. So service which you can outsource is the accounting and bookkeeping, payroll services, tax preparation, and the planning and the projection, management accounting, or I can say the financial statement, higher level review, or I can say the forensic accounting. You can outsource any kind of the audit and attestation services, whether it is the full-fledged audit or a reviewed financial or a compilation or a 401k audit or a HOA audit. You can outsource. The well-trained team, okay, are ready to serve you. Backyard tax preparation, okay, if someone is just backyard as far as the IRS filing is concerned, there are a lot of voluntary disclosure process are going on, streamlined process are going on. We have a team specialized on the backyard taxes, multi-state sales tax preparation, multi-state income tax preparation after the 2018 Supreme Court decision of the economic nexus of the sales tax. Now, this service is also going to be a crazy in the future of the multi-state sales tax preparation. Okay, and we have a specialized team, okay, who can help you or your clients for the nexus study, whether it is a physical nexus or economic nexus study. We can handle entire project, okay, remotely as far as the multi-state sales tax filing is concerned. We can help your clients for the business valuation. We can help the tax litigation, resolution, and the notices. So, and apart from that, okay, accounting firm in the US may outsource the admin services, the secretarial services, okay. We can assign the dedicated person from here, okay, and we're just managing the scheduling, everything for you, okay. So I think that the most of the services can be outsourced, okay, where your back office team is just taking care of all the compliances for your client, whether it is the preparation, review, and you can focus more on the core area, the client relationship, strategy, or a client tax planning, projection, structuring kind of the stuff. Okay, Abby, next slide, please. And what are the engagement model? Okay, this may be a question for the so many people here. What are the engagement model? At the Infinity Globus, we have an engagement model that shifts from the small accounting firm to a large accounting firm. So our various model that is started with the dedicated model, that is the most popular model, where you can hire the dedicated staff from my office, okay, they are totally dedicated to you. And on dedicated model, we have a different category, bookkeeper, accountant, tax preparer, tax reviewer, tax manager. The staff is totally attached to you, okay. It is just like your in-house team, just sitting in my office, okay, directly reporting to you. And whatever the task based on the profile, okay, you can assign to them. And also the very interesting part, just like you are hiring the staff, okay, we just, before we assigning the person to you, okay, you have to interview that candidate, okay, you have to select it, okay, then they will just start working on it. So dedicated model, also we have a half-time dedicated model as well. So if someone, okay, can't afford the full-time staff, they can hire the half-time staff. Full-time staff is working around the 140 hours to 160 billable hours in a month, okay, and the half-time staff, okay, is generating around the 70 to 80 billable hours in a month. Also, we have on dedicated side, we have a seasonal staff, okay. So if you need the help specific to a tax season, okay, we have that model as well. But the dedicated model is the most popular model, where you just work with the one person, properly train that person. It is just like your extended team. That is a dedicated model. If someone don't want to commit too much initially, they can start with the ad hoc model. So we have an ad hoc model where on hourly basis, we have a different hourly rate for the different kind of the services, whether it is the bookkeeping, accounting, payroll, or a tax preparation, or maybe a tax planning and projection. Definitely it is the ad hoc model. And the tax packages, okay, this is again the very interesting, okay, that we introduce the tax packages that definitely suitable to the small accounting firm, where if you want to test our service or just test the outsourcing, you can start with the small packages like a 25 tax return in a year, 50 tax return, or a 200 tax return in a year. You have a liberty to use your package throughout the year, January to December. Anytime you can utilize for any kind of the tax return, whether it is a 1040 or a trust tax return, partnership, S corp, C corp, any kind of the tax return, you can utilize the packages. So tax return packages generally suits the small accounting firm if they don't want to hire the dedicated model. But we have a model, okay, whether it is a dedicated, ad hoc, or a tax packages that suits the small accounting firm to a large accounting firm. Okay, Epi, next slide, please. Okay, it is the question answer. So Brendan, anyone can take the question answer session. Brendan, up to you.
I'm sorry, you go ahead and have the first question. Hello?
Anyone, if anyone has question, can raise their hand or type the question in the chat, please. Thank you.
Yeah, I think, the biggest points when I was taking a look at some of the chats that come in here is changing the mentality of the accounting profession, right? Everybody's looking to become more profitable. Everybody's looking to take advantage of what's going on out there. And with the inside of taking a look at changing the mentality as an accountant or as a business owner, majority of the time when we work with our small business clients, we've seen great practitioners fall into the job of ownership. So how many of us out there that own accounting firms, they say you're in a 10 million or less in revenue, how many of us fell into that same role that many of our clients have, that were great accounting practitioners, and by slowly working our way up, we found ourselves as an owner, or we left to have as an owner. When majority of us leave to start, our businesses and to be owners, we have an idea of what it's like, right? To have our own free time and to make our own schedules and to make the unvast amounts of money or not have any limitations on the amount of money that we can make. And that's what Ali, Peter, and Vivek we're all talking about is how do we become better business owners who run accounting firms, right? Is making sure that we can manage our talent. Our talent is the only thing that we hang our hats on at the end of the day. As Alan likes to talk about, they have to go home and they have to rest and they have to sleep. We're not running a factory making widgets, right? We're doing highly, profitable services that our clients need. Especially with COVID, many of our clients turn to their accountants to understanding where's the financing going to come from? What do I do, right? We're the ones who remain calm and tranquil while chaos is happening. And most importantly, so like some of the comments that I've seen is how do we capitalize on these, times of chaotic inferences, right? We have AI coming down the road. We have technology coming down the road. We have people working from anywhere possible. We have other people who can help us from anywhere possible. So how do we build win-win relationships? How do we take care of our staff? How do we move them from low-income services to high-income chargeable services? How do we change our mind as a business owner so that way we can remain profitable? How do we step across that line so that way we can charge what is rightfully so, right? Majority of the time when you look at, doctors, you look at lawyers, they're charging for their services. Where is the disconnect as us, as accountants and practitioners, that we don't charge for our services? Why are we always discounting, writing off services so that way, we have staff working 17 hours a day when we only can charge 12, right? And so these are some of the topics that we wanted to talk about, provide you with a quick little answers in hopes that we can continue this discussion. You have the greatest thought leaders here with Alan and Peter, and to follow them to see what they believe is coming down the line, how to best prepare you so that way you can capitalize, because the baby boomer generation is leaving. The younger kids, they're coming up. As you've seen, there's been a drop off in the amount of people studying an accountancy because it doesn't have the prestige or the cachet. So what is it going to take for you to build, your accounting firm with the right culture that is not only a place where people want to come and work, but contributes back to society, contributes back to your community? Because at the end of the day, the only thing that separates us, a lot of us small, accounting firm owners, is the boots on the ground, right? Technology is coming down. You're starting to see price getting pushed down from QuickBooks. You're starting to have online accounting services. When is QuickBooks going to be the largest accounting firm out there, right? And what are we doing as practitioners to, don't stick our heads in the sand, but to come out right and to say, okay, thank you very much that we have people who's taking the time to educate our clients on how important bookkeeping is, tax preparation is. How do we provide it, at a fair price while being profitable? And most importantly, That's just the hook to get someone through the door so that we can charge for our advisory services and the real reason as to why you need a financial accountant, a financial advisor, as we like to call ourselves. And where's that disconnect and how do we get there? And those are just some of the thoughts that I've taken away from listening to Alan and Peter speak. Take a look at anything else over here.
Thank you, guys. Thank you, Brendan. So those who will be interested in learning more or asking questions or signing up for a training with Peter or Ellen can stay in the meeting or call us at 754-258-4994 or drop us an email at hello@infinity-globus.com. Thank you so much. Thank you, all the panelists. It was great having you at the speaking panel today. We are glad being associated with you, Team Infinity Globus.
Yeah, thank you so much, Alan, Peter, and Brendan. Thanks, Happy, yes, coordinating everything. Thank you so much.